Welcome students, welcome to lecture number 4 where we will be covering module number 2 under subject Indirect Taxation. So we had begun with module number 2 Levy and Collection of Tax, where we had seen the scope of supply and composite and mixed supply. So we have covered this under lecture number 3. Today we will be covering Levy and Collection and Composition Levy. So students, we have seen what is the scope of supply under section 7. We have seen what is composite and mixed supply under section 8. Today we will be seeing levy and collection of supply of tax, which is covered under section 9. So section 7 is scope of supply, section 8 is composite and mixed supply, and section 9 is levy and collection of tax. This is the complete levy and collection of tax is covered under section 9 of CGST Act 2017. So now let me explain you all what is levy and collection of tax. So students, first of all, let us understand what is levy. So the levy is nothing but to impose, and this power to impose tax is given in the Constitution of India. So let it be any taxing statute. Let it be in case of direct tax, indirect tax. The basis for charge of any tax depends on the taxable event. Only when there is a taxable event, then only you can impose tax. Taxable event is nothing but occurrence of any event which triggers the levy of tax. So here you can see levy and collection of tax is divided into two. Levy of tax is separate and collection of tax is separate. Now, why levy is separate and collection of tax is separate? First, let us understand what is levy of tax. Levy of tax is nothing but imposition of tax and assessment of tax. So, levy means imposition as well as assessing the tax. Now, what do you mean by imposition of tax? Imposition means charging the tax on particular transaction, levying the tax on a particular transaction. On those transaction, which is nothing but a taxable event, where you are going to charge the tax, it becomes a levy of tax where you are imposing the tax. So in GST, the taxable event under GST is, which we have seen as discussed earlier, is nothing but the supply, where you know that a particular transaction amounts to supply. What is the first thing the supplier is going to do? He is going to impose the tax on that supply. Correct? And imposition of tax, as and when he imposes tax, immediately he is going to assess the tax. Now, what do you mean by assessment of tax? Calculating the amount of tax to be paid on a particular supply in terms of calculation. So, for example, when you go to a shop to buy a particular product, what is the supplier going to give you? The supplier is going to give you a product. Along with the product, he is going to give you an invoice, where he is going to impose the tax, correct? And secondly, he is also going to assess the tax. Suppose if the product is having 18% GST, he is going to calculate 18% on the value of the product that you have purchased, and is going to assess the tax and give you the invoice amount. So understand students, levy of tax is nothing but imposition of tax and assessment of tax, which goes hand in hand. The moment you are going to charge the tax, the moment you're going to impose the tax, that is the time where you're going to even assess the tax. Assess means calculating the actual amount of tax to be collected by the recipient or by the purchaser. Secondly is collection of tax. Now, what do you mean by collection of tax? Usually there is a service provider or service receiver, or there is a supplier and the recipient. So usually the supplier, what he does, he collects the tax from the customers. But this collection of tax is not that. This collection of tax is collection of tax or payment of tax to the authorities, to the governmental authorities, to the respective GST authorities. You have to pay the tax. So levy, at the time of levy, collection of tax does not take place. That means as and when the supplier is collecting the tax amount from the customer, immediately he will not make the payment of that tax to the government. He will make the payment of the tax later on. Reason for that is, suppose levy and collection, if it is together, what will happen? Every day 10 n number of transactions takes place. So after every transaction, he cannot keep on depositing the tax to the government simultaneously. So what happens is, for the administrative purpose, government has told that first you impose the tax, you assess the tax, and later on, after a period of 1 month or after every quarter, make the payment of tax to the respective GST authorities. So collection is kept separate, levy is kept separate. Because it is not possible every day there are n number of transactions, it is not at all possible that after every transaction the supplier has to keep on depositing the cash, the tax collected to the government. So government has told a particular month transaction, whatever tax has been collected, pay it in the next month or pay it in the next quarter, and that is called payment of tax, which in detail we will be seeing in the later modules. So students, I hope you'll have understood what is the meaning of levy of tax, what is the meaning of collection of tax. Is this clear, students? Yes?
Yes, ma'am.
Okay, let us move ahead. So levy and collection of tax in detail we'll be seeing now. It is covered under section 9. Section 9 subsection 1 says forward charge. Section 9 subsection 2 we'll see how is the levy and collection of tax happening in petroleum products. Section 9 subsection 3 we will see how is the collection of tax going to happen in some specified supplies. Section 9 subsection 4 for unregistered supplies, and section 9 subsection 5 in case of e-commerce operators. So now you all will not understand, as and when I explain, you all will get to know what is all this. So students, what do you mean by normal charge or forward charges? Normally under GST, what happens is there is two parties. One is the supplier and one is the recipient in case of goods, and in case of services, there is a service provider and service receiver. So usually, normally what happens is the service provider or the supplier collects the tax from the recipient or service receiver, and whatever tax it is collecting, it pays to the government. So it is whose responsibility to pay the tax to the government? It is the supplier who has to pay tax to the government by collecting it from the recipient. So this is called as a normal charge or a forward charge. So normal charge or forward charge means where the supplier pays the tax to the government by collecting it from the recipient. So this means forward charge. Now in case of petroleum, we know that government has kept 5 products on which there is no GST as such levied as on today. So there is 5 products, that is petroleum, crude oil, diesel, petrol, natural gas, aviation, turbine fuel. On all these 5 products, if any supplier is supplying these products, the tax on it is not yet levied. It would be levied from the date that is being notified by the government. So remember, under forward charge, the supplier is going to pay tax to the government. In case of petroleum products, 5 petroleum products, as on date, there is no tax that would be levied. It would be levied on a particular date, and that date will be notified by the central government. Now, when we come to RCM of specified supplies, now what do you mean by RCM? It is reverse charge mechanism. The full form of RCM is reverse charge mechanism. Now, when I said forward charge, what did I mean by forward charge? Where the supplier pays the tax to the government. Now, in case of reverse charge, here the recipient will make the payment of tax to the government. So supply of all those goods and services which is notified by the government. Government has notified certain list of services and goods which, if they are supplied, the payment of the tax has to be made by the recipient and not by the supplier. So only in case of certain specified supplies, not in all the cases. In normal cases, forward charge will apply. RCM for unregistered suppliers. So what happens is, when suppose a supplier is unregistered and he is providing certain products to a person who is registered. So here what happens, the supplier is unregistered, the recipient is registered. So in such case, the recipient has to pay the tax to the government. So here the taxable person is the recipient and not the supplier. Then in case of e-commerce operators, again the government notifies a certain list of services where the payment shall be made by the e-commerce operators. Now, what are e-commerce operators? Operators who supply goods and services on an electronic platform. So in such case, the responsibility to pay the tax to the government is on the e-commerce operators who are operating that particular electronic platform. So for example, suppose Amazon, there are various vendors who sell their products on Amazon. So Amazon is an e-commerce operator who is supplying goods and services. So after any transaction is made, they will deduct the tax amount, and it is the responsibility of Amazon to pay the tax to the government. So this is section 9, where there is normal charge, forward charge, where the taxable person is the supplier. In case of petroleum products, it will be tax will be levied on a date that will be notified by the central government. In case of RCM, here the taxable person is the recipient. In case of RCM for unregistered supply, here the taxable person is again the recipient. And in case of e-commerce operators, any transaction happening on e-commerce platform, the responsibility of payment of tax is again on the e-commerce operators who's operating that particular e-commerce platform. So this is levy and collection of tax under section 9, subsection 1, 2, 3, 4, and 5. Did you all understand this particular section, students? Yes? Yes, students? Okay. So let me sum up what is levy and collection. See, levy is nothing but tax is imposed on all the intrastate supply, that is supply within the same state. Which tax is imposed? CGST and SGST. So basis of charge as per CGST Act and basis of charge as per SGST Act or UTGST Act. So levy means levy of tax. Which tax? CGST or SGST or CGST or UTGST Act, only if the supply is an intrastate supply, that means supply within the same state. Next, if the supply is within interstate, that is supply from one state to another state, there is going to be levy of tax. And what is going to be the levy of tax? It is going to be the IGST tax that will be imposed on all the interstate supply of goods or services. Now, the tax will be paid and collected again by the taxable person. And who is the taxable person? We have seen in case of RCM, it is the recipient. In case of forward or normal charge, it is the supplier. And supplies which are outside the scope of GST, like alcohol for human consumption, it is not under the scope of GST. So therefore, no tax will be levied on that. No GST will be levied on alcohol for human consumption. Now, this levy, when I'm talking imposition of tax, this tax will be imposed on a particular value, and that value is nothing but the transaction value. In detail, we will be seeing in module number 3 that on what is the tax to be levied. Just for now, just remember, tax will be levied on a value, which is the transaction value. Now, when the tax is levied, it is levied on certain rate or percentage of that particular value. So as we have already seen in our previous lectures, CGST, usually the GST rates are 5%, 12%, 18%, and 28%. So when it is an intrastate supply, students, two taxes are levied: CGST, SGST. 50% CGST, 50% SGST. So if I take 5%, it will be 2.5% of CGST, 2.5% of SGST. So under the CGST Act, the maximum rate that will be levied cannot exceed 20%. And in case of IGST, the maximum GST rate that can be levied cannot exceed 40% as per the provisions of the Act. Is this clear, students? Yes, students? Then we have even seen 5 petroleum products which will be levied only on the day that will be specified by the central government. So once again, I just recap, we just do a quick revision of levy and collection. In case of levy and collection, CGST, SGST will be charged in intrastate supply, and IGST will be charged in interstate supply. And in case of union territories with legislature, again CGST and SGST will be charged if it is within the state, if within the union territory, and if it is interstate, IGST will be charged. And union territory without legislatures, CGST and UTGST will be charged, and if it is interstate, IGST will be charged. So this is all about levy and collection of tax. Moving ahead to composition levy. Now, what is composition levy? Again, a quick revision: section number 7, scope of supply; section number 8, composite and mixed supply; section number 9 was levy and collection; section number 10 coming to composition levy. So in composition levy, we will be seeing what is the overview of the scheme, what is the turnover limit for composition levy, who can opt for composition levy scheme, who are not eligible for composition levy, and what is the advantages of composition levy. So overview of the scheme. The composition levy is an alternative method of levy of tax designed for small taxpayers whose turnover is up to a prescribed limit. The objective of composition levy is to bring simplicity and to reduce the compliance cost for the small taxpayers. So again, composition levy for goods is covered under section 10 subsection 1 and section 10 subsection 2, and composition levy for services is covered under section 10 subsection 2a. So students, just remember that composition levy is an option given to the small taxpayers. It is not compulsory. Only who wish to opt for this particular scheme under GST, they can opt. But it is an option open only for small taxpayers whose turnover does not exceed a prescribed limit. Now, what is this prescribed limit? We will be seeing in the succeeding slides. So this is just a scheme which is totally optional and not compulsory. Whichever taxpayer, small taxpayers want to opt for it, they can opt it by their own wish and will. Now, I told you all prescribed limit. Now, who can opt? Prescribed limit. Now, let us see what is this prescribed limit. Now, in case of goods, suppose if there is any small taxpayer who is dealing in goods, supply of goods or supply of only goods, if his aggregate turnover does not exceed 1.5 crore in the preceding financial year, then he can opt for composition levy. So see, if the aggregate turnover limit of 1.5 crore in the preceding financial year for becoming eligible for composition levy of goods. So any small taxpayer can opt for composition levy if his aggregate turnover does not exceed 1.5 crore in the preceding financial year. There are two things, as you know: current financial year and preceding financial year. So preceding financial year is a year immediately before the current financial year. And in case of 8 special category states, so suppose if the supplier is from Arunachal Pradesh, Uttarakhand, Manipur, Mizoram, Meghalaya, Nagaland, Sikkim, Tripura, if he is supplying goods in this 8 states, then his turnover limit is reduced to 75 lakhs. So if he's a supplier in these states, he can opt for composition levy only if his turnover does not exceed 75 lakhs in the preceding financial year. So let me just quickly tell you all, in case of goods, there are two turnover limit. One is in all other states, the turnover limit is 1.5 crores. And in 8 special category states, it is 75 lakhs. Next, in case of services, what is a prescribed limit in case of services in order to opt for composition levy? It is 50 lakhs. So where the aggregate turnover limit of 50 lakhs in the preceding financial year for becoming eligible for composition levy for goods. So in case of, sorry, this is for services students. So in case of services, the limit is 50 lakhs, irrespective it is 8 special category states or other states. So for services, it is uniform for all these states. It is 50 lakhs. Turnover, if does not exceed 50 lakhs, they can opt for composition levy. So people with smaller turnover are the small taxpayer. If their turnover limit is below this prescribed limit, they can avail this option of composition levy. Next, let us see what are the benefits. Now, what is composition levy? What are the benefits and what are the rates of tax under composition levy? See, usually we know that normally if a taxpayer is not under composition levy, under the scheme of GST, we know that there are taxes 5%, 12%, 18%, 28% that a supplier has to collect and pay to the government. But if you are opting for a composition scheme, the rates of tax are little reduced, are less, because they are small taxpayers and they cannot have a heavy burden of collecting and paying heavy taxes to the government. So whoever is opting for this scheme, the rates of tax is for goods. Suppose if he's a manufacturer of goods, then the rate of tax is 1%. Now, if I say 1%, it means 0.5% CGST plus 0.5% SGST or whatever UTGST of the turnover. So 1% will be charged on the turnover and not on the value of goods sold or supplied. Remember, students, 1% will be charged on the turnover. In case of restaurants not serving alcohol, the rate of tax will be 5%, which again 2.5% will be CGST, 2.5% will be SGST or UTGST, and again 5% will be calculated on the turnover. And for others, it is 1%. Sorry, this 5% has to be 1%. For others, it is 1%. Others means if it is not a manufacturer, it is not a restaurant, all others it is 1%. Now, in case of services, the rate of tax under composition scheme is 6%. 6% again means 3% of CGST plus 3% of CGST and or UTGST. So which sums up to 6%. So this is the rate of tax under composition scheme. If any person or any supplier is opting for composition scheme, they have to pay a reduced rate of tax or as a percentage on the turnover and not on the amount of goods or services supplied. So is this clear, students? Yes? Is this clear?
Ma'am,
Yes.
ma'am, composite tax and composition scheme both are same.
See, under composition scheme, if you opt for this scheme, this will be the tax rates. So if it is okay, so if it is a manufacturer of goods other than, see students, manufacturer of goods leaving certain goods, so manufacturer of goods other than other than those manufacturers who are manufacturing ice cream, pan masala, tobacco or aerated waters, if this 1% is applicable only to those manufacturers other than 4 types of manufacturers, other than manufacturers of ice cream, pan masala, tobacco, and aerated drinks. Then when I talk about restaurants, it means only those restaurants which are not serving alcohol. And then others means all other suppliers who are eligible for composition scheme, means whichever taxpayers turnover prescribed is below the prescribed limit falls under others. So is this clear? Yes, students? Okay, moving ahead. Who are not eligible to opt for composition scheme? So who are those persons who are not eligible to opt for composition scheme even if their turnover is below the prescribed limit? So let us see in case of goods first. Goods which are not eligible for tax. So any supplier, students, who is engaged in making any supply of goods which are not leviable to tax, which are not chargeable to tax at all, they cannot register themselves for the composition scheme, or they cannot register themselves for the composition levy. Is this clear? Second one is interstate outward supplies. So any supplier who is engaged in making any interstate outward supplies of goods, no, they cannot opt for the composition levy. So in short, it means that composition levy is applicable only for goods that are being supplied within the state. Suppose if I am a supplier and I'm making interstate supply of goods and services, and my turnover is below the prescribed limit, still I cannot opt for composition levy, because composition levy does not permit any interstate outward supplier to opt for its scheme. Next, e-commerce operators. So any person supplying goods through e-commerce operator and who is required to deduct tax at source, they cannot opt for composition levy. Manufacturers of ice cream, pan masala, tobacco, and aerated drinks, they are not eligible to opt for composition levy. Gradual taxable person or non-resident taxable person. So any supplier who is either a gradual taxable person or non-resident taxable person, they cannot opt for composition levy. Now, who is a gradual taxable person, students? Gradual taxable person means a person who is supplying goods and services occasionally in certain taxable territory where he does not have a fixed place of business. So there he takes his registration as a gradual taxable person. So for example, if I am having my business in Belgaum, okay, but I want to provide my services in Hyderabad, but I don't have a fixed place of business in Hyderabad. I don't have a place of business in Hyderabad. Therefore, I will take a gradual taxable person registration in Hyderabad, since I don't have a place of business in Hyderabad. So that is gradual taxable person, means who provides services occasionally and does not have a fixed place of business. Next, who is a non-resident taxable person? He is a person who again undertakes the transaction of supplying the goods and services occasionally in India, but does not have a fixed place of business in India. So he will take his registration as non-resident taxable person under GST. So these are all the registered persons who are not eligible for composition levy for goods. Now, registered person who are not eligible for composition levy for services is goods which are not eligible for tax. Again, supplier who is engaged in making any supply of goods and services which are not leviable to tax. Interstate outward supplies, any supplier who is providing services interstate, making interstate outward supply of services, they cannot opt for composition levy. E-commerce operators, so any person who is supplying any services through an electronic commerce operator and who is deducting tax at source, they cannot opt for composition levy. Manufacturers of notified products, again ice cream, pan masala, tobacco, or supplier of notified services. And again, casual taxable person or non-resident taxable person who's providing services, they cannot opt for composition levy. So these are all persons who cannot opt for composition levy. Therefore, when I said 1%, I said 0.5% CGST, 0.5% SGST, because if it is interstate, obviously they will not fall under composition scheme, and GST will they will not fall under composition scheme, and therefore they will not be liable for 1% of tax to be paid. Next, let us see what is the advantages of composition levy. With all this, we can know that under composition levy, if any person is opting for composition levy, he has to pay low rates of tax. Now, why low rate of tax? Because the normal rate of tax is 5%, 12%, 18 and 28%. But if any person is opting for composition levy, he has to pay 1% tax or 5% tax or 6% tax, depending if he is a manufacturer, if he is running a restaurant, or if he is a service provider. Therefore, when compared to the normal rate of tax, he is paying a lesser amount of tax. Hassle-free simple procedures for such taxpayers. Now see, normally the tax is being uh, levied on a value on each and every transactions, but in case of service, in case of any person who's opting for composition levy, it is very simple. When he's making each and every transaction, he need not charge the tax. So it is a very simple procedure. He just sells the good, and in the bill he just mentions the goods amount without the tax amount, because he's not charging the tax from the recipient, and he's not imposing any tax on the value of the goods. He's imposing tax on the turnover. Next, simple calculation of tax based on turnover. Again, the same thing, that since he is charging tax on the turnover, the calculation becomes very simple, because once he knows what is the turnover of a year, he just charges a particular tax on a rate on that particular turnover and pays the tax to the government. A very simple annual return. So see students, in case of composition levy, the payment is quarterly. He need not pay monthly payment to the government. The payment to the government is made quarterly, and there is a very simple annual return. In normal cases, the annual return is very complicated, very lengthy to be filled, but in case of composition levy, since it is basically designed for small taxpayers, therefore a very simple annual return format is kept for the composition levy dealers. So they have a very simple annual return. So all these are the advantages of composition levy. So is this clear, students? Yes. Did everyone understand what is composition levy? Who can opt for composition levy? Yes, students.
Yes, ma'am.
Yes, ma'am.
Okay. One more thing I just want to tell you all, that I told you all, in case of persons, suppliers who are providing interstate supplies, they cannot opt for composition levy. But that doesn't mean that they cannot receive the material from outside. See, this is from the supply side. Any supplier who is supplying goods outside the state, they cannot apply for composition levy. But any supplier who's procuring goods from outside the state and selling it within the state, they can opt for composition levy. So that option is open for, at the point of receipt. It is okay if they do interstate transaction inside of purchase, but only inside of sales they shouldn't be having an interstate outward supplies. So thank you so